Welcome to the Bound to be Rich podcast, where I attempt to reverse engineer people who seem to be successful no matter the circumstances so that you can apply those lessons to your own life. I'm your host, Ismail Humet. In this episode, I'm answering your questions about Bitcoin, crypto, and investing. My last episode, Cash is Trash, got a lot of engagement, and pretty much immediately after publishing, the crypto markets went on a tear, which kind of validated my thesis. Since then, though, there's been a pullback. So there's a lot of attention in this area, a lot of curiosity and interest. I got a ton of questions about crypto, and I look forward to diving into all that with you here. So without further ado, let's dive in. All right, so before we get started, I just wanted to give a quick shout out to Estonia. I was really pleasantly surprised to see that this podcast was ranked third in all of Estonia, the whole country, right behind Gary Vee and Tim Ferriss. A great company to be in. So I appreciate everyone supporting the show. And if you're in Estonia, follow me on Instagram, send me a DM. I'd like to speak to some people listening from over there. And of course, I got to start this with a typical disclaimer. Nothing I'm saying here is investment advice. It's just my opinions. I could be wrong. Invest at your own risk. Do your own research. Hopefully, I just open your mind and point you into things that you may not have been aware of. So I got a lot of questions about, like, why should I buy? And by the way, if you guys do have questions, you can follow me on Instagram, DM me there, or there's a link in the show notes you can click on to submit an audio question. That's how I'm getting all my questions. All right, so a lot of them are really about why should I buy? So I'll try to summarize this as best as I can. First of all, you should listen to the previous episode where I dive in deep on inflation, the devaluing of cash and all the currencies around the world. That's really my major reason for why you want to buy something like Bitcoin. Why Bitcoin specifically? It has a very hard supply cap, right? So there's a limited number of Bitcoins that will ever be made, 21 million. And there's already been a couple million probably lost. So there's even less than 21 million available. People have lost them through various incidents in the past. So there's a limited number. Whether we're in the year 2250, your great-great-grandchildren are in flying cars, there's only 21 million Bitcoin. There cannot be a single Bitcoin more than that ever made. And like I said, there's probably less because of the ones that have been lost since then. It's different than other things that you'd want to invest in to protect against inflation, like stocks, real estate, etc., and gold. Stocks, you may know that they can always issue more shares, right? So they can, if they need to raise money, a lot of companies issue more shares, and that increases the number of shares outstanding. So there's not a real hard supply cap there. With real estate, people like to point out that there's only so much land, right? Which is true. But there's a lot of factors where, the sea level is rising. There's less land. You can build more floors, more stories on skyscrapers and create more units that way. If we start to populate other planets, I'm getting a little out there here, but the point is that the supply is not as limited as you may believe. And the same thing with gold, right? It's limited. You can only dig out so much, but if it becomes worthwhile, right? If the price of gold increases drastically, you can get better at technology. You can mine more per mine. You can get out more gold. There's even, I've read, there's gold in the seawater. It's just not worth it to mine that out of the seawater. So you can get into a future where it's worthwhile enough to figure these things out and get more gold per year, right? So with that being said, again, I'm going to go back to the point that Bitcoin is a hard cap. There's only so many going to be mined. And once the mining stops, which is probably, I think it's in 4 years or so, it decreases. The supply decreases every 4 years. There's no more going to be made. That's it. Doesn't matter if we're in the year 5,000, 21 million Bitcoin. So that to me is the best thing to own when the currencies, the dollar, these things around the world are being printed, the units are being increased, and they're being devalued, right? So that I dive into a lot more in the previous episode. I urge you, if you haven't listened to check that one out. I think it's probably the most important podcast I may ever make. So check that one out. The other thing that I want to touch on is asymmetric risk. So this is another reason why I want to own Bitcoin. you want to own and invest in things where, let's say you may lose $1, right? But the upside is $10 or $20. So if someone said, hey, you can put your money here, you might lose 50%, but you may make 5,000%, right? Those are the kind of bets that I want to make. That's called asymmetric risk. There's a certain number of a downside, but huge upside that outweighs that downside risk, right? So I actually kind of, how do I put this? I look at this as kind of like the stock market, where the stock market can go down 50%, right? The value of your home can go down 50%, but how much can it go up? Can your home quadruple in value next year? Can the stock, 10x in 2 years? Maybe, but it's not really likely. It's different with Bitcoin, where there's that limited downside, which I would say is comparable to other things. I don't think Bitcoin's going to zero. Some people may disagree with me. So there's some value there. There is some downside, but the upside is so huge that to me, it offsets that downside. And that's the kind of stuff that I want to bet on and that I want to own. The other really interesting thing that I'm going to touch on even more in depth later, because I got questions about this too, is that you can actually earn income with Bitcoin. You can earn income with a cryptocurrency, which is amazing. Not only can you earn income with your Bitcoin, with your crypto, you can actually borrow against it, right? So that you never have to sell the crypto, sell the Bitcoin. You can borrow against it and get money. Obviously, it's debt, it's leverage. But the point is that you can monetize your cryptocurrency holdings. You can monetize your Bitcoin holdings. And again, I'll get into all this a little bit later because I've got a few questions on that topic. Another question I got really frequently asked in a bunch of different ways, but I can pretty much summarize it by saying like, hey, should I buy now? Is it too late? It's gone up so much, et cetera, et cetera, et cetera. So when I recommend Bitcoin to any of my friends, there's a few things that I touch on. Number one, don't buy it if you can't stomach volatility. If you're the kind of person where you buy it and it went down 10%, you panic and you're always looking at it, oh my God, I dropped another 10%, don't buy it because you're going to go crazy. There's a lot of volatility with Bitcoin. That's a big thing that people used to hate against it. But you have to understand the reason there's so much volatility is that it goes up so much, right? If you have something like Bitcoin and it's averaged, it's been around 10 years and it's been going up about 200% a year for 10 years average. When you have something going up that much, there's going to be pullbacks along the way, right? You can't go up 200% a year and never have a pullback. It doesn't go up in a straight line. So the offsetting thing against it going up that much is that, hey, sometimes it goes down 30%. Sometimes it goes down to 40%, 20%, et cetera, et cetera. That's part of the game. That's just the way it goes. If you can't stomach that volatility, it's probably not something that you want to invest in. So you have to know your own personality. The other thing I tell people is that whatever you put in, just know in the back of your mind, you're not selling that anytime soon. At least for a year plus, don't even look at it. Don't even think about selling it. So put that in your mind when you buy it. There's volatility, but it's okay because I'm not even going to look at it for a while. I know that's going to go up in the long run. As I'm recording this, I'm looking at the price. There's the pullback. It's down to about 47 and change. It was up at 64,000 and change about a week ago, a few days ago. So there's been about a 25% to 30% dip from the peak. So to me, based on my analysis, my reading of the technicals, I think we're in a strong buy zone. I said from when the dip first started, I was telling my friends, hey, I know it's 64, it went down to 60, 50. My analysis shows 47, 48,000 as to be a strong support zone, right? That doesn't mean it won't go below that. That doesn't mean it won't go below that for a short period and come back up. It just shows me that there's a lot of support in this area. So I am buying aggressively in this zone. If it breaks this zone, it may go lower. There's people out there that say it's going to 40. Honestly, Bitcoin is the only thing, and my wife will tell you this, I get excited when Bitcoin goes up and I get excited when it goes down. Because when it goes up, you're making money. And when it goes down big like it is right now, it's an opportunity. It's a buying opportunity to get more. So I'm not panicking. I'm buying. If it goes down to 40, like some people think it may, I'd be buying very, very aggressively. So I guess I'm kind of saying that I think we're in a very strong support zone right now. I don't think it's likely to go much lower than here. If we do, I think it'll be short-lived and bounce back up pretty quickly. I could be wrong. The downside about being so public with this stuff and putting it in a podcast is that people can point at you and laugh and say, haha, you're wrong. But this is what I think right now based on what I'm reading. Also, people are saying, hey, it's so much higher than it was a year ago. You bought it for under 10,000. How could I pay 40,000? It just seems too much. And what I would say is that when I was buying Bitcoin, when it was below 10,000, it was much more risky, right? So yeah, people got it for cheaper than you, but they took on greater risk than you. I would argue that right now, it's way less risky than it was back then. So you're paying, you're paying a premium, you're paying to compensate for that decrease in risk. So having said all that, at this point, I think it's a good buy zone. Why did it drop so much? Okay, it's a complicated question. It's hard to analyze this stuff live because it's live. There's a lot of things changing all the time. But what I would summarize is, again, there's other factors, but what I would summarize this is with the fact that there's a lot of leveraged trading going on. What does this mean? This is also what happens in the stock market too, by the way. So when the price is going up so much, it went up to 64. It's been going up on a tear. It went from 10,000 a year ago to 64. That's a lot of increase, right? Traders start piling in. Everyone starts trading it. It's easy money. Look at crypto. Look at Bitcoin. Oh my God, I'm doubling my money every week, right? It attracts people to trade, but to trade with leverage. The downside with that is that, well, the upside is that you make a lot more money, right? So if you put in $100 and the Coinbase, Binance, whatever these exchanges that you use, is these exchanges that you choose to trade, they lend you put in 100, they lend you 500, right? So when you're trading with 600, you can obviously make more money. The downside is what happens when there's a pullback, right? So when you're using all this leverage, this margin to trade, and there's a huge pullback, the people that lent you the money get nervous. They're like, oh my God, I lent you money. You bought Bitcoin at 60,000. It's 55. You don't have a lot of money in your account. So what they do is they force you to sell your holdings. This is, again, true in the stock market, crypto, anywhere. When you're using someone else's money, they can liquidate your position. They force you to sell. And then, obviously, you get forced to sell. You lose a lot of money. But now the people who bought it below you, they're also losing money because it's like a domino effect. Everyone's getting leveraged. Everyone's being forced to sell. The price keeps going lower and lower. And because it's going lower and lower, more people are getting more liquidations. And it's domino effect. Obviously, eventually it gets sold so much that it starts to find a support level and it reverses. And I think we're kind of nearing that point now. But we'll see. Another question I was getting was, how do you buy strategically? Like, what's your strategy behind how you're buying, and where do you buy, and like how is the mechanics of actually buying? Like, some people don't know. They've never bought Bitcoin, never bought crypto. How do you buy it? All right, so what I like to follow is the DCA method, the dollar cost averaging method. Basically, what this is saying is that you don't go all in at once. If you have $10,000, you don't buy 10,000 in one shot. You break it up and you buy it, maybe 1,000 a week, and you average in. I'm a fan of this. I've been averaging into Bitcoin for a long time. I actually buy daily. I buy a certain amount daily, every day. It doesn't matter what the price is. I just keep buying. In addition to that, I also buy larger chunks on big dips like we have now. So I do the combination of those two. I DCA, buy consistently, but when there's a big dip, which I classify as 20% to 30% or more, I buy larger chunks. Obviously, the lower it goes, the more aggressive I buy, the more I buy. What do I use to buy? For the dollar cost averaging, I found to be the easiest Cash App and Swan. So let me talk a little bit about those two options. I think Cash App is probably the easiest thing for someone to get going with. Very simple to create a recurring buy. I used it. The problem with Cash App that I didn't like is that there's a limit on how much you can withdraw. So when you want to get to the point of withdrawing that Bitcoin off Cash App, you can only do $2,000 a day or $5,000 a week. So if you're someone like me where you've been, buying recurring for a long time and Bitcoin goes up 500%, you can end up with a lot of it in your account, and it takes forever to get it out with the limit of $5,000 a week. So you can use Cash App. If you do, the only thing I'd urge you to do is that withdraw it periodically. Don't wait until you have a ton and then start withdrawing. So I shifted my recurring buys into this tool called Swan. I really like Swan. I found that it's probably, I think it's the cheapest, the lowest fees out there on buying Bitcoin in a recurring nature. So that's what I'm using now. Basically, you fund it weekly, and then it uses that money to buy it every day. I have links to both of these things that you can use in my show notes. If you sign up with my links, there's obviously a reward. I think with Cash App, if you don't have an account, you get $5 free. And Swan as well, there's a special link they set me up with. If you click it, I have my own homepage with them. There's a benefit to signing up. They give you some free Bitcoin using my link. Otherwise, with my dip buys, I use primarily Coinbase, and I have a link for that as well. I think you get $10 of free Bitcoin using the Coinbase referral link that I have. What I would say, though, is that you sign up for Coinbase, but once you have a Coinbase account, a lot of people don't know this, there's a Coinbase Pro account. You already have it if you have a Coinbase account. You just got to log in through a separate link. Same login, same account, same everything. Just people don't know. To get there, you go to pro.coinbase.com, and they have its own app. It's the Coinbase Pro app. Why do I like Coinbase Pro? If you're a beginner, Coinbase is fine. It's easy. It's much simpler. It just has higher fees. But when you start buying a lot, like I have been, it makes sense to use Coinbase Pro. It looks more intimidating. It looks more professional with all the charts and whatnot, but the fees are a lot lower, like rock bottom fees. So I use Coinbase Pro to buy all my Bitcoin. The other question that I got frequently from people is that I don't have $50,000 to buy a coin. What if you don't have money to invest, et cetera, et cetera, et cetera. So first of all, this may seem simple to some of you, but it's amazing that a lot of people don't know this. You don't need to buy a full coin. You don't need to spend $50,000 to buy a coin. You can buy fractions of a coin. That's the beauty of Bitcoin. It's not just one coin, two coins, three coins. You can get 0.01 coin. You can get 0.00001 coin. So you can put in $10. It doesn't have to be $50,000. So I have to keep reminding people of this because people that are coming into this and are new don't know this. All right. So if you don't have money, so I hope that addresses the question that you don't need a ton of money. You can start buying $10 a day, $10 a week, whatever you can afford. What if you don't have money to invest? Well, there's cool things that are being developed out there. For example, if you don't have money to invest, you can use credit cards or debit cards where instead of getting cash back rewards, you get Bitcoin back. So I use this thing called Fold. I don't know if they're accepting new users yet right now, but I will put a link to it in the show notes so you can sign up and check it out and get on their wait list if you want. And there's a bunch of other people coming out with credit cards like BlockFi. It's just hard to get them right now. They're all on wait lists, but I will include links to that stuff in the show notes. And again, the main benefit there is that just spend your money on that card instead of your other credit card, and you'll get Bitcoin back instead of cash back. Why would you want to do that? Again, maybe you get 2% back, 5% back on your credit card, depending on what card you have, what you buy, but that money is decreasing in value versus, hey, maybe you'll get 2% Bitcoin back, but Bitcoin, 5X's in a year. So you actually got way more than 2% back. So at this point, I pretty much all my spending is on Fold, and I get Bitcoin back on all my spending. The other cool thing is for those of you that are familiar with stuff like Ebates, which is now Rakuten, there's these things out there basically where you go through them when you shop online and they give you cash back, right? Everyone knows Ebates. They have this thing now called Lolly, where it's the same thing. You use Lolly when you do online shopping, and if you click through Lolly, you get cash back. You get Bitcoin back instead of cash back. And depending on the store, it varies. So some stores give you 1% Bitcoin back. Some stores give you 10% Bitcoin back. It depends where you shop. Those are really easy ways to start accruing Bitcoin, stacking sats, as some people like to say. If you've heard that term, you don't know what it means. Satoshi, there's 100 million Satoshis in one Bitcoin. So again, 0.00001 is 1 Satoshi. So you want to focus on stacking sats, accruing Satoshis, accruing Bitcoin. Don't feel bad if you can't get a Bitcoin or 10 Bitcoin or whatever these rich people out there have. You want to focus on getting more Satoshis. Just keep getting as many as you can. Don't worry about people that are rich. Worry about what you can do with what you have. So you can earn it on the money that you're spending, either with a credit card or debit card, or use something like Lolli and earn it through there. Again, I have links to all the stuff in the show notes to make it easy for you. And typically, using the links that I have in the show notes, you get a benefit and I get a benefit as well. So it's a win-win. The other thing I wanted to mention quickly is if you are a gamer and you have a very powerful computer, very powerful graphics card, you may not know this. Some people I've been speaking to lately did not know this. If you have a strong graphics card, you can actually use your computer to mine crypto. You can make crypto with your computer. Without getting too into the weeds, you're basically using your computer's processing power to validate transactions on the blockchain, and you get rewarded by getting paid in crypto. The hot thing to mine right now is Ethereum. With one graphics card, you probably won't make a ton of money, but I think depending on the card you have, some people have these graphics cards, you make like $5 to $10 a day by just having it on. So why not, right? If you're sleeping, if you're at work, turn the mining rig on and just make money every day. And that crypto that you mine goes up in value again. So it might be $5-10 a day, but that $5-10 a day may be worth $50 to $100 a day in the future. It's really easy to learn it. I learned it in a YouTube video, like 30 minutes, how to mine Ethereum. So again, if you have a graphics card that's powerful, I think it's worth looking into doing that. Why not, right? Free money. The other wonderful thing about crypto, and I wrote a blog post about this recently that got shared a lot. The title was How to Earn 1,000 Times the Interest You Get at the Bank Right Now. So you can check that out. That's in the show notes as well. Basically, you're able to earn passive income with your cryptocurrency holdings. You get interest on your crypto. And I use the word crypto because a lot of people like to buy these other coins referred to as altcoins. Primarily myself, I am a Bitcoin holder. I only recommend Bitcoin as an investment. I do not recommend other coins, although I do think Ethereum will do very well. The other coins, other than that, I don't really recommend. But I'll get some questions about that stuff later, so I'll dive into that more later. Basically, there are these new modern banks online that are being built, like BlockFi and Celsius. That's my top two, where they give you a high interest for putting your money or your crypto into their bank, for lack of a better word. So if you create a BlockFi account or Celsius account, you can put your Bitcoin in there and make 6% interest on it. Paid out in Bitcoin. You can get it in cash if you want, but I get it paid out in Bitcoin, and you're basically getting more Bitcoin for free, which is powerful. And if Bitcoin goes to where I think it'll go to in the price, every 1% or 2%, whatever Bitcoin you can get, will add up to a lot. How do they do this? They're basically banks. They lend out. So you're putting your coins in like BlockFi or Celsius, and they lend those coins out to other people. They charge a higher interest, and they give you an interest as a reward. It's basically like a regular bank, right? You know, they take your money, you put it in the bank, they lend out mortgages, and they make 4 or 5% on the mortgage. I would urge you to really look into this. A lot of my friends have companies that have a lot of money in the bank account for the business. You don't get any interest in banks, especially if you have a business checking account. You get zero. They don't give you any interest with the business checking account, right? So if you have a business with a ton of capital just sitting there, it's going to waste. I think you should buy some Bitcoin and earn 6% on that, and that will go up in value. So you're earning more. But if you don't want to risk it, there are these things that I talk about in the blog called stable coins. Basically, there are like these exchanges like Gemini is one of them. They have a Gemini USD coin. Just to simplify it, they basically put like $10 million into a vault and they create 10 million coins. So you have 10 million coins, but they're backed by $1. So it's basically each stable coin is equivalent to $1, and they actually have that money in the vault. It's like a backing the coin. Why would they bother with doing this? Like, why don't you just have $1? I don't understand. Pretty much, if you have ever employed people in other countries like I have, or if you have family overseas, or if you're trying to send money to other countries, it's very difficult. You may have come across this. It's expensive to do a wire transfer. It takes a lot of time for the money to transfer. Some countries, like, they don't allow PayPal accounts, so you have to find other ways of paying people. I actually had an incident where I had to pay someone in a country, and I couldn't send them a wire to that country. I couldn't PayPal them in that country. They couldn't have PayPal accounts. I had to send money to someone else in a different country, and then that person had to pay the person in my country. It's just crazy. So the stable coins solve that, right? You digitize the money and you send the money instantly for very, very, very cheap. That's huge. Huge if you do money internationally. That's basically the reason why they created these stable coins. And if you have your money in a stable coin on Celsius, you can earn 10.51% interest. Crazy. That's over 1,000 times more than what Chase Bank or Citibank gives you. So I have a stable coin. I have my US dollars in a stable coin in Celsius. It sounds complicated. It's not. It's basically cash. So I have it in there earning 10.5% interest, and I keep my Bitcoin in BlockFi. I'll get into this a little bit more later because someone asked a question about this. But basically, what you want to walk away with is that you can earn money with high interest on your Bitcoin. If you don't want to buy Bitcoin, you can still move your dollars over and earn 10% interest. Again, links to all this stuff in the show notes. Just quickly, I think with Celsius, you get $40 in free Bitcoin if you sign up with my link. And you want to make sure with Celsius, they have a lot of promo codes. So for example, right now, not only do you get $40 in free Bitcoin by using my link, if you use the promo code, and they change, but the current ones I'll put in the show notes, you get another $40 in Bitcoin. And if you put in a certain amount of money, they give you even more of a promo. There are so many bonuses that you can stack by using Celsius that I like that app a lot. What's something that you started using during the quarantine that you will keep using after it's over? For me, I started using this thing called ButcherBox. I love steak. Sorry to offend you vegans out there, including my wife. But I remember when the quarantine first started, you're locked at home. You wanted to find ways to get food delivered to you. But I didn't want to pay crazy amounts of money for steak that you can buy at the grocery store for a lot cheaper. So I tried all these different ones. Maybe I shouldn't name them, but I tried a lot of different ones. And I ended up trying ButcherBox. And to me, that was by far my favorite. Highest quality. It's grass-fed beef, organic, antibiotic-free, all that good stuff. Yeah, they deliver it straight to your door in this freezer box. And I found personally that the price of these steaks are, or at least comparable to what I was paying in the grocery stores, the Costco's or whatever, and much better quality. I don't really buy chicken or seafood from them, even though they have that stuff. They also have pork. I stick to mostly the steak because I find the price is great and the quality is great. So I strongly suggest you check it out. You pick the kind of meats that you want into a box, and then every few weeks you can set it to be a schedule, or you can delay it to whenever you want. But whenever you want a delivery, you pick the meats that you want. They deliver to your house. What I really like about them is that they have deals all the time. So to sign up, you have to commit to a box of meat, but then they also periodically offer these crazy deals where you get New York strip steaks, ribeye steaks for half price. So I like to add a lot of those deals, and my box gets bigger and bigger and bigger, but it's a good excuse to throw on the grill and have a barbecue. So I strongly suggest you check it out. I've been very happy with them, and the few times that I've had issues with my order, I just chat with them, online, and they take care of it. Amazing customer service. So if you do want to try it out, there's a link to it in my show notes, and by using my link, you get $30 off your first order. I think that's a pretty generous thing. So I thought I'd share it with you guys. If anyone does try it, or if anyone already uses it, let me know how you like it. Show me some photos of your skills, because I've been working on my grilling steak skills during quarantine, so I can throw it down with anybody. All right, so I got a lot of more specific questions. So I try to go through the more generic, high-level ones in the beginning, and then I got some great specific ones. So let me go through these one by one. All right, so someone wrote me, do you think the highly speculative trading of altcoins, specifically Doge, is overall good or bad for the crypto market? If crypto is going to last, it needs to trade on something more than pure speculation. Great question. I totally agree with you. And again, this is what I was kind of saying earlier. I don't really recommend these altcoins as investments. I think they're all speculation. Can you make a lot of money trading them? Yeah, I guess, but you can also lose a lot of money too. So if you want to trade and you want to gamble and it's fun, fine, go ahead, no problem. Just make sure you're aware that you can lose all the money that you're putting into those coins. I'm talking more about investing. I'm talking about preserving your wealth. To me, it's just Bitcoin's the best. When I first got into crypto, I did have other coins. And a couple years ago, after learning more and more about it, I pretty much sold all the other cryptos and moved everything over to Bitcoin. It's worked out really well for me so far. So I agree with you that it's a lot of speculation. Most of these other coins are really not worth anything. I think a lot of them are going to crash. I don't want to recommend any of them. I just want to recommend Bitcoin. Bitcoin is the one that's really got the most. There's a lot of factors, right? So if I had to summarize it at a high level, it's a hard supply cap. It's a fixed supply. Like Ethereum, which I also think is going to do fine because it's very useful, but there's no hard supply cap. You actually can't even tell how much Ethereum there is out there, right? That's a big red flag to me. These other coins, like Ripple, Dogecoin, it's the same problem where, like, Dogecoin is a joke, basically. Like, it started off as a joke. Does that mean it can't go to $2 or $1 or whatever? No. I mean, we live in a crazy time right now, the internet meme culture, where people can pump something to ridiculous amounts, right? So I don't know where it's going to go. People made a ton of money with it, but a lot of people are going to lose with it because at the end of the day, there's no real value. They can just make more Dogecoin. Like, there's a guy out there who made it. There's a CEO of Dogecoin. The same thing is with Ripple. Like, a lot of people like XRP, they like Ripple. I don't like investing in. To me, the power of Bitcoin is that it's a fixed supply cap and it's decentralized. Decentralized. That means that no one controls it. Ripple, there's a company called Ripple. There's a CEO. They decide things, right? They can change things. They can start to issue more. They own a lot of Ripple. They own the majority of Ripple. What if they wanted to sell a chunk of that? So having it centralized introduces a lot of these other risks, right? Bitcoin, the creator Satoshi Nakamoto, nobody knows who that is, and I think that's by design. It's decentralized. Nobody controls it. The code is public. Everyone can analyze the code. It's a totally different beast. So is it bad for the crypto market, the speculation? I don't know if it's bad because they all kind of follow Bitcoin. As Bitcoin goes up, these other coins go up. And again, people are going to make a ton of money trading these other coins. I just don't think I feel comfortable recommending investing in them. Are there a few out there that may end up being really valuable and end up being great? Yeah, but 90% of them are garbage. So why, this is the way I look at it, why would I risk investing? And this is how kind of I decided to go into Bitcoin instead of holding my other coins. Why take a chance on all these other coins that may end up going down to nothing, right? When I can just own Bitcoin and make 200% a year. Like, why is that not enough? Why risk it? So I'd rather get the best horse, the sure thing almost, and just put it into Bitcoin and sleep easy. The next question. Okay, so should I put more money into Bitcoin? Also, is it too late to buy Dogecoin? It was 14 cents the day before and I didn't buy it. I think the person sent this to me when I think Dogecoin was like 30, 40 cents, whatever it was, and it's much lower now. I just can't recommend buying Dogecoin. Sorry. You want to trade it, gamble. Again, that's how I look at it. Should you buy more Bitcoin? Yes, I think now is a good buy zone. I would be buying right now. Doesn't mean it can't drop more. I kind of talked about that in the beginning, but there's a lot of factors that I see that to me show support at this price range. Generally, a couple things is that there's a lot of volume historically at this price. So a lot of people have bought in at this price. Secondly, there's a lot of new accounts being created on Coinbase and whatnot, like 60,000 a day. So a lot of people are coming into the market right now. That's very bullish. Also, there's a lot of other technical things to look at, like the RSI, the Relative Strength Index, the MACD, other things that I don't want to get too technical with on here unless you guys want to know more about it. You can ask me. But they all seem to indicate that a bottom is kind of forming here, right? So does that mean that it won't go lower? No. Does that mean it's probably a good place to buy some? Yes. in my opinion. So I'll leave it there. All right, another good question. So great episode, great info on inflation, decrease in crash value. What are your thoughts on Bitcoin ETFs? Okay, perfect question. I love this. I often complain to a lot of my friends that I own a lot of Bitcoin in my IRA, Roth IRAs through these ETFs. They're not all ETFs. Like the one that I own is Grayscale Bitcoin Trust, GBTC. It's actually a trust because it's not legal yet to have a Bitcoin ETF in America. In Canada, they approved one. In America, it's just a matter of time. So the only things that they have right now are these trusts, like GBTC. When it's allowed to have an ETF, they're going to convert into an ETF. That's what GBTC has publicly said. So I feel comfortable owning GBTC. I own a lot of it. Why would you buy GBTC? I think if you have the option, you want to own Bitcoin directly, always, right? Again, why? Because you can put it on BlockFi, earn interest. You can borrow against it on BlockFi. You can monetize it. So if you own the Bitcoin, you have a lot of power. However, if you have a retirement account, like a Roth IRA or 401k or whatever, you can't buy Bitcoin directly. There are ways to do it. It's a bit more complicated, but pretty much for most people, the only option you have is to own GBTC or something similar, or to own a company like MicroStrategy, MSTR. It's a stock where they're basically buying a ton of Bitcoin. I think they own about 100,000 Bitcoins right now, which is worth 3, 4 billion, 5 billion, whatever it is. So you have to get exposure to Bitcoin through alternate methods. So what do I think about Bitcoin ETFs or trusts? I like it. I own a lot of GBTC. If you can avoid it, if you have cash, I strongly suggest that you buy Bitcoin directly because then you can monetize it in other ways. If you can't, if you have a 401k and you want to put some of your money into Bitcoin, the only real ways to do it is through these trusts, which I think is the best option. The other option is to own a company like MicroStrategy. And the third option that I didn't really get into is to own a company that mines Bitcoin, like Riot, Mara, etc. I would order them in that order. I'd rather own the trust or the ETF, followed by a company that owns a lot of the coins, followed by a miner, or like Coinbase just went public, an exchange. I think those are the least attractive ones. I'd rather actually own the coins directly. And if I can't own it directly, I'll own it through a trust or an ETF. So yes, I like it a lot. Another question I got was, do you actually stake your Bitcoin in BlockFi, or do you only put stable coins in BlockFi Celsius? Okay, so good question. The reason this question comes up is that there's a lot of people that are like hardcore Bitcoin crypto people that don't trust BlockFi or anything. Like they buy Bitcoin on Coinbase and they immediately take it out and they put it into it's called a hardware wallet, and they put it in their vault at home and they hide it in their hardcore, right? It's basically equivalent to, the relatives that you have that don't trust the banks and they keep cash at home. Like they don't trust the banks. I think that I understand the hardcore Bitcoin people, they don't trust, like they have the saying, not your keys, not your coins. Like you want to own it directly. If you don't own it directly, it's just an IOU. I understand that. But I don't think BlockFi Celsius are that risky, to be honest with you. I think they are less risky than banks. The difference with banks is that the banks are FDIC insured. So anything under $250,000 is insured by the government. If they have to, they'll print more money and they'll give it to you if anything happens, right? But if you analyze how banks work, they're way over leveraged. I think if for every dollar they have, they loan out like 20, 25 times that amount. So the leverage is insane. If you all went to the bank right now and asked for your money, you wouldn't get it because they don't have it. Like they just can't give everyone their money. There's not enough. They've lent it all out. So that to me is ludicrous. If you look at the way BlockFi and Celsius works and you understand it a little bit more, I think you get a little bit more comfortable. For example, you can borrow money from BlockFi, right? If you have Bitcoin, let's say Bitcoin is $50,000, right? And you have one coin. you can put that coin in BlockFi and they will give you a loan without checking your credit, without checking your income, nothing. If you give them the coin and it's worth $50,000, they can give you $25,000 cash. Easy, instantly. Obviously, there's an interest rate. I think it's like 9% or something like that. And that's how they can afford to give everyone else interest that puts their coins on BlockFi, for example. What I want to draw your attention to, though, is that, as I said, the banks are 20, 25 times leveraged. For every dollar they have, they lend out 25. As I just showed you, you can only get a max 50% LTV loan from BlockFi. You put in one coin, they give you 50% cash. That's a 2-to-1 coverage ratio. That means for every dollar that BlockFi lends out, they have $2 in Bitcoin. Double. That's very safe. That's actually the most highest loan you can get is 50% LTV. You can actually get less, 35%, 20%, I think it was. So most people don't leverage up that much. The point I'm trying to get at is that they have a lot more reserves for the money that they lend out than banks do. So I don't see them being that risky. On top of that, everyone's like, oh, they don't have FDIC insurance. They have other insurance. So to me, the combination of them not going crazy and lending out crazy multiples and that they have insurance makes me comfortable at least putting some of your Bitcoin into it. Does that mean if you have, 10 coins, put all 10 into BlockFi? No, I'm not saying that. A lot of people, including myself, what they do is you only get 6% interest on BlockFi on your first coin. After that, it goes down. On Celsius, you get 6.2% interest on your first 2 coins. So what people do is they put 1 coin in BlockFi, they put 2 in Celsius, and they keep the rest in their the hardware wallet that they have. Or if you only have, 0.5 coins, you can put some in BlockFi, some in Celsius, and that way you diversify. You're not all in on one bank. You limit your counterparty exposure by having it be in 2 places. So for those reasons, I don't find it to be that risky. There's people that say, don't do it. Don't put your money there. I think that's a little bit foolish. Maybe don't put all your money there. Maybe don't put over the 1 coin limit that they have for 6% interest. But I think there's a lot of free money to be taking there that it's worthwhile, in my opinion. Next question was, do you time Bitcoin and sell at highs? I haven't been, and I plant myself firmly on the HODL camp, but curious if you try and buy and time Bitcoin purchases. Okay, this is a good question because a lot of people are trading this stuff now, and I debate this with my friends. Personally, I trade stocks and options, but I do not attempt it with Bitcoin. I just keep buying and holding as much as I can. And here's my logic as to why. As we've seen recently, when Bitcoin runs, it really runs. So if you try to time your entries and exits, you risk missing out on those big jumps. And that's where a lot of the returns are made. Also, there's capital gains tax, right? So if you own it, it goes up a lot. You sell it, you have to pay tax on those capital gains, unless you live in a state that doesn't have capital gains tax like Florida. But you have to be really, really right on your timing to make it worthwhile, to offset the tax that you'd be accruing. Then you also have transaction fees of buying and selling. And when you combine that with the fact of missing out on a big jump, I just don't find it worthwhile. Sometimes the best thing they can do is just sit there, right? So if you believe something is going to 10x in value, like I do, and more, why risk messing around and playing games and getting in and getting out? Just buy it and keep buying and just leave it be, right? It's easy. Why try to get at an extra 2-3% return if you can just own it and make 200% a year? That's what I keep coming back to. Historically, Bitcoin makes 200% plus a year over 10 years. Some years is more, some years is less. Why try to make 205 or 210? 200% is amazing. Just own it, sit there, and be happy. That's how I look at it. Another good question I got was, my fear personally is having too much of my portfolio in one asset. How do you think about diversifying? Do you stick to percentages and reallocate consistently, etc.? It's pretty much like, how much do you put into Bitcoin? How much is too much? Is it risky to have too much into one thing? Personally, I like diversifying. I do reallocate quarterly on my stock portfolio, my long-term accounts. I think it's a good it's a good thing to do. However, I think we're in a very unique period right now. I am irresponsibly long on Bitcoin and, to a lesser degree, equity, stocks, and precious metals like gold. Because of what I outlined in the previous show about cash being trash, it's being devalued, you don't want to have too much cash. I only keep a small amount in cash because there is an opportunity cost to having no cash, right? Because these things come up, these dips come up, and there are opportunities presented where you want to have some cash available to capitalize on them. That's up to you, whether you want to have 5% in cash, 10% in cash, whatever the number is. I like to have some. Just in case things go bad, I have some to buy more. The other thing that I'd say is that it's really difficult to maintain a proper allocation in something that goes up so much, right? So I have wealthy friends that they said, hey, you know what? I'll put 1-2% into Bitcoin. And then it went up so much. Now their account's 15-20% in Bitcoin, and they get nervous because they don't like that. They want to diversify. I don't get as nervous because of something I touched on in the beginning, the asymmetric risk, right? So you got to weigh the upsides and downsides versus the alternatives. So if you don't have Bitcoin, what else do you buy? In my opinion, the upside in Bitcoin is way higher compared to the other options like equities and gold. While, this is key, while having a similar downside, right? So how much can Bitcoin realistically drop? 50%? You could argue the stock market could drop 50%. In March, it dropped 30-40%. Gold can drop 50%. Not overnight, but these things also can drop. But can they go up 250%, 300, 500%? I don't think so. So I think cutting down on your Bitcoin allocation to increase your alternatives, it may feel safer, but it will actually drag down your future returns without actually reducing your risk. So to me, that you might want to play that again because that's really important. What's the risk-adjusted return? Yeah, I feel better that I reduced my Bitcoin exposure and I bought some more stocks, but at the end of the day, they all have the same risk downside. They all may drop 30, 40, 50%, but which one can actually increase a lot? And I talked about this with real estate too. Everyone wants to buy real estate. Can your real estate jump, triple in a year? No, it's not going to happen. And this is a famous saying that I like that I heard. I forgot where I heard this, but basically, diversifying is a great way to preserve your wealth, but making concentrated bets is a way to generate wealth. So basically, it depends on your personal goals. If you have a ton of money and you want to protect your wealth, yeah, diversify, great. If you want to build your wealth, if you want to make money and make a leap and make a jump, you have to make concentrated bets, right? You don't want to gamble. You don't want to take stupid risks. You want to research, study, and say, hey, I really believe in this thing, Bitcoin, like me. I believe in this thing. I think it's going to 10x. I'm going to put more into this. I'm confident. I have a high level of conviction, right? If you're rich already, yeah, you diversify. Next question. How do you keep buying something as it's going down? What if you're wrong? Don't you ever get nervous? Okay, that's a good question. I think everybody's different. Personal risk tolerances, it all depends on you, different personalities. I find people who knock Bitcoin are just uneducated, right? They just don't know enough about it. They don't get it, and they just knock it. They think it's a scam. I used to be in that boat where I didn't get it. But the more you research something, the more you understand something, obviously your confidence level increases. This is called your conviction. So if you have a lot of conviction in something, you're not afraid to get in deeper. You're not afraid to buy when everyone's selling because you have such a high belief that you're right. Can you be wrong? Of course you can be wrong, but it's a game of probabilities, right? So understanding it, researching it, learning it, truly understanding how it works gives you that conviction to say, you know what? Nothing's changed. None of the variables have changed. It's just people being scared, and that's why it's dropping. Did the blockchain get hacked? No. Did something happen? No, it's just dropping because of leveraged traders. So that allows me to keep my confidence level. If something crazy did happen, it was a major shift in my analysis, okay, that's different. But if it's just a fear of panic selling and the core fundamentals are still in place, why would I adjust my thesis? There's no reason to. And it's just a lesson in human psychology, because it's funny, if you're in a store and everything gets on sale, right? You wouldn't leave the store. You don't want to buy the sale. Investing, the stock market, Bitcoin, it's the only place where they will literally yell out loud, 50% sale, 50% sale, and people will run out of the store. They will run. The bigger the sale, the faster they run out. So it's the emotional, the behavioral psychology of human beings. We're like, oh, everybody's selling, I gotta sell. And it's the same thing when everything's going up and everyone's buying. Oh, let me get in, let me get in, let me get in. As opposed to sticking true to analysis, logic, and not wavering from that. We're emotional and behavioral creatures, right? So I like when things go on sale. Another question, what is your price target for Bitcoin? The infamous question. All right, so this is obviously what everyone is curious about, what they want to talk about, but you got to take it with a grain of salt. It's just a prediction. It's risky. No one knows exactly where things are going to go by this date, et cetera, et cetera. But I like to look at, personally, I like to look at a few models that are out there. My favorite one is the stock to flow model. It's being quoted in a lot of these, like even Merrill Lynch. These big banks are writing papers on Bitcoin now, and they're also using this as one of the factors in their analysis. But basically, it looks at the stock of something, the supply of something, and the flow. So how much Bitcoin is there? That's the stock. And how much Bitcoin is being mined? That's the flow. It's the same thing with gold. It's the same thing with real estate. Like how much is there and how much new real estate's coming online. That stock to flow ratio, it's kind of being put into this famous chart. So as the flow decreases, the price increases because there's less new things being made. It's the same thing for anything, right? And that's a major factor in Bitcoin. So every 4 years there's a halving cycle where there's a less Bitcoin being mined until they reach the cap. We just had one less than a year ago, or about a year ago, and that is what started this bull run because of that decrease in the halving. It cut the reward rate in half, so there's half of as much Bitcoin being made. That obviously increased the price. That happens every 4 years. That's why you shouldn't be too scared if you buy Bitcoin and it drops, because if you just hold on to it long enough, it'll go up much higher than what you paid, simply because of this stock to flow model, right? And if you follow that, you'll see the next target for Bitcoin is to match or pass gold, right? Gold has a $10 trillion market cap, and Bitcoin right now it was $1 trillion. That's a little bit less. I don't have the number in front of me, but it's probably like 900 billion or so right about now. So if you go from $1 trillion and you match gold, you 10x. So 50,000, you 10x. That's $500,000 a coin. Do I think that's going to happen this year? No. But if you're talking about a long-term price target, in years from now, I think it will be $1 million a coin. I think it'll pass gold because it's a better storehold of value. For all these centuries, countries and banks held gold because that was the best form at the time. But there's a lot of flaws with it. You can't transport it as easily. You have to have security guarding it in a vault. You can't do transactions in it. It's too heavy, et cetera, et cetera. There's a lot of flaws with it, as opposed to Bitcoin, which is easily transferable. Anybody can buy Bitcoin. You can easily transact in it because you just send a 0.0001 coin. You can't sit there and shave a gold bar to have enough to buy a loaf of bread. So in many ways, it's superior to gold. So I just think it's a matter of time before it matches that market cap, which would take the price to like $550,000. Again, not now, in a couple years or so. And I'm not the only one that says that. CEOs of these famous banks are now starting to say the same thing. When just a couple years ago, they were all making fun of Bitcoin and calling it a scam. Now they're saying it's going to be a $10 trillion market cap. It's funny how things change the more you get educated on something. If I look at that stock to flow model, and if I look at previous halving cycles, I would say that the price, in my mind, it may get as high as 300,000 this year, 2021. It may touch that high. I don't think it'll end that high. I think it may overshoot the mean of the chart and go that high, and it'll pull back. But to be safe, I think my price target for this year is $150,000. Again, it may go much higher than that and pull back, and I think it may even end up higher than 150. But that's my conservative price target. Too many factors to get into. I could do there's books written on this. I could do a 10-hour podcast on this, but essentially, there's a limited supply. A lot of these wealthy institutions and individuals are just starting to get into it. A lot of people don't, like a lot of these funds can't invest in something until it's $1 trillion, $2 trillion, $3 trillion market cap. It's not big enough. So once Bitcoin hits that $2 trillion market cap, there's rumors that the U.S. will approve having an ETF. And then when it's an ETF, there's going to be more funds that can invest in it. It's just a lot of these big players are just starting to get into it. And at the same time, there's a decrease in supply. Not just the halving, but the amount of coins that are on these exchanges being traded every day is rapidly decreasing because people like me, and hopefully you, buy these coins and they're called holders. They just hold it forever. They're not selling it. They take it off the exchange. They take it off the market and they put it in their hardware wallet and just save it. Then they know they're not selling it for years, maybe ever, because you don't have to sell it. If you sell it, there's a tax hit that you take. You can just hold it and just borrow against it. You can just hold it and earn interest on it, and you never have to pay tax on it. So those factors combine to create, I think, a perfect scenario right now for it to catapult into $100,000 plus this year. And I think it'll cross 100,000 way before the end of the year, maybe the summer. But let's see if I'm right. And if I am, I will replay this segment and brag about it. And if I'm wrong, I'll still put it up and you can make fun of me. Here's another great question I got. I'm curious on your thoughts on David Einhorn's letter stating that the stock market is fractured and possibly in the process of breaking completely. This is another reason to diversify, as I feel there will be a shakeup in the market soon. Okay, good question. So I read Einhorn's letter. For those of you who don't know, he's a famous investor. He's a value investor. People follow what he says. But just to knock him a little bit, he hasn't done very well the last few years because no value investor has done very well the last few years. It's been a growth market. He outlined some very interesting things in his letter. Great points. I agree with them. For those of you who didn't read it, don't want to read it, I'll have a link to it in the show notes. But if you don't want to read it, he pointed out a few things that are happening that are really not good and weird. And I agree with him. Like there's this one company on the stock market that owns, all it owns is one deli in New Jersey. And that's it. And that deli made $20,000 last year. And the company is valued $100 million, right? Absolutely ridiculous, obviously. So there's stuff like that going on that make people like him worried because they think we're in this crazy bubble. And I do think we're in a bubble. But how do I look at this? All right, so there's a few things you want to weigh here. Are things getting overvalued? Are they getting extremely valued and they may pop? Maybe, right? Maybe. But how do you measure value? That's the key thing. And I touched on this a little bit in the previous episode, where the way people value stocks is, or any investment really, is through the discounted cash flow method, the DCF. And they basically look at interest rates, right? So if I'm buying this company, if I'm going to invest into this thing, I have to make more money than I would buying something risk-free, like a treasury, a U.S. treasury. And they look at the interest rate there, and let's say that's it. Right now it's like 1.7%, whatever it is. And they say, okay, so that's the risk-free rate, 1.7, let's say 2% on average. And let me throw in inflation, all right? Let's say inflation is 2%. So 2% risk-free rate, 2% inflation rate. We're at 4%. That's called my hurdle rate. I have to make at least 4% on an investment to make it worthwhile, because I can make 2% risk-free and inflation is 2%. So some people add a risk premium to that and say, you know what, to offset the risk of this investment, I should make another 2%. So I got to make at least 6% a year. So they look at all the future cash flows of an investment of a business, and they discount that by 6% a year to say, this is what it's worth now. People like Einhorn are looking around and saying, look at how crazy everything's gotten. Everything's going up so much. It's overvalued. But you have to factor in the interest rate, right? The interest rate is at record lows, like almost zero. So if you have a 0% rate that you're using in your discounted cash flow model, the company's worth infinity, right? That's the crazy thing. So it's really based on the rate. So I agree with Einhorn that things look frothy. It looks like real crazy, but you have to factor in the rates. So can there be a pullback soon? Yes, I'll elaborate on why I think so. But you have to look at the rates. So as long as the Fed keeps the rates low, as long as the rates are low and they're printing money, I just don't see how the market goes down. It may go down temporarily for some other reason, but they're devaluing cash, the rates are low, and they're incentivizing people to buy stuff. Everyone's buying real estate because mortgages are so low. So it may feel like, oh my God, this is crazy, but it's actually logical, right? The rates are low. If that changes, though, things will pull back. And that's why there was a fear recently of the Treasury, the 30-year Treasury going up. The market pulled back a little bit, and then it kind of stabilized. And the Fed is on a mission to keep rates low. They are on a mission, and they want to keep inflation high. In that environment, I just don't see why you wouldn't own stocks or anything, really. You don't want to have cash. I've made that abundantly clear. So the other thing to factor, though, into this is that the printing of money, the inflation that's happening, even if he's right and it's overvalued and there's a bubble and it's going to pull back, there's so much money being pumped in that you may not see a pullback. So you can look at other countries' stock markets like Argentina, any other place that has had hyperinflation, and you look at the rate of inflation and you look at the return in the stock market, and it's still very high. So I guess it's easy to say it that way, and I understand why he's saying that way because he's a value investor, but you got to factor in the interest rates and the money supply. If the money supply is being increased, even if the company's earnings go down, if you increase the money supply enough, the value of the company is going to be higher. It's going to be the price of the company is going to be higher. So it's complicated. Can there be a pullback? Yes. There's always black swan events. There's always things that can happen that causes a pullback, or there's fear. But with those things not changing, I don't see the argument for selling your stocks or selling your stuff and going into cash. I just don't see it, my opinion. All right, awesome show. Thank you, everybody, for submitting your questions. I really enjoy doing these shows because I get to, give you the information that you actually want by answering your questions. So please continue doing that. If you haven't followed me on Instagram, there's a link in the show notes. You can do that. You can DM me there. I love getting your feedback. I love hearing from you. If you want to submit an audio question, which I love even more because I get to hear your voice, you can do that as well. There's a link in the show notes. But otherwise, if you found the information valuable and you want to give back and support the show, there's a few ways you can do that. You can use the links that I have in the show notes to sign up for any of these accounts. There's a benefit to you and me, so it's a win-win. You can spread the word and tag me on any posts that you do on Instagram. I love those. I usually share those. And if you want to go above and beyond, you can treat me to a cup of coffee. There's a link in the show notes for you to buy me a cup of coffee. Someone already did buy me a few coffees, and I would have shouted them out, but they were anonymous. But whoever you are, I appreciate you. Thank you so much. Until next time. And there you have it. If you enjoyed this episode, please remember to leave a review. I may even give you a shout out and read yours out on the show. For any and all resources that we discussed, check out the show notes or head on over to boundtoberich.com. Until next time.